Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So I'm going to be taking you through today's session. I'm sure there is a lot to learn. Recently, just about 2 minutes ago, there was some good movement in the markets. Of course, 30 minutes ago at 3:30, we had some data announcement that caused some massive spikes to happen in the markets. So just a brief overview of what was moving. I would start with the most volatile one, which seems to be gold. So gold made an impressive jump all the way down, touched the 1896 price level for the first time in a long period. The last time we saw gold trading here was around 29th of June and all the way back here at the 14th of March. So it was a very interesting play after trading within this particular wedge. So a very sharp drop and then a rejection of lower prices. And now this is the current price level at around 1903. So it was a similar thing with other pairs. So if you look at the dollar index, you can see there was some significant jump all the way up and then back downwards. So it seems like all the moves that we were anticipating, they happened quite sharply and the market reversed immediately. So Euro USD also doing something similar. And of course, the volatile pair USD CAD also had similar jumps. In this case, you can see the jump all the way down, but the market has not completed the reversal yet. So let's dig deep or dig deeper into the data, try to understand what was happening. And once we understand all that, then we'll know how to consume this information. So today has been a busy day for the economic calendar. We have seen quite a number of events happening. So right from the morning, I want to be highlighting the major news. So monetary policy meeting minutes from the Reserve Bank of Australia. The RBA basically said that they're okay, that inflation is moving in the right direction. So for them, there was no need to continue hiking interest rates. They will choose to maintain interest rates at 4.1% up until there's evidence enough from the data showing that they must go for another rate hike. So for now, they are content with the current interest rate level, and they are confident that inflation will drop to us the identified target of between 1% and 3%. Then the wage price index came in exactly the same as the previous reading, quarter over quarter, 0.8%. Before we looked at a host of Chinese data. So we had industrial production slowing down to 3.7% in the previous month in China. This is year-over-year data. Retail sales, 2.5%, all missing expectations, and fixed asset investment also dropping by to 3.4% versus a previous reading of 3.8. So this data is indicative of a slowing Chinese economy. And as a result of this, there was an immediate reaction by the People's Bank of China, where it basically cut interest rates for the medium-term loans by 15 basis points. So now the interest rate in China is currently at 2.50%. So the reaction by the central bank is expected to stimulate the Chinese economy and help strengthen the recovery. So then unemployment rate came in higher than expected at 5.3%, with the youth or teenagers between 18 and 21 years old having the highest unemployment rate, which was approaching 20%. So it was a big worry for the Chinese economy. So also they have a crisis brewing in the real estate sector, where last year we had a company called Evergrande basically collapsing after it was unable to pay its debts. I can show you this quickly. So Evergrande, if you look at the 5-year performance of the stock, you can see how it dropped last year in 2022 all the way down to almost zero. And now it's at 0.00040 USD per share. So this was a big surprise. And now the company that is currently experiencing problems is Country Garden. So Country Garden Holdings is down year to date, 66.89% after it missed on a bond payment, that is a corporate bond, and it's bound to continue losing unless something shifts fundamentally or it gets a bailout from the government. So over the last 5 years, it's down 91.78%. So it's a crisis brewing in the Chinese real estate sector, which is hurting growth as well as a recovery. So besides this, still in the economic calendar, we also had GBP news, where we looked at the job data. So the claimant count change, number of people claiming for unemployment insurance increased to 29K, almost double that previous number, meaning that the job market is softening and there is a higher unemployment rate. You can see the unemployment rate moved from 4% to 4.2%. Then the average earnings index jumped higher, 8.2%, 3 months over a year. And of course, the basic earnings index also jumped higher to 21-year high. And this basically implies that employers are paying higher wages in order to retain talent. And as a result of this, we are seeing a much stronger UK consumer, leading to more inflationary pressure. So this caused some volatility in GBP pairs, and of course, a big sell-off in the benchmark index, the UK 100, or what we call the FTSE 100. So later on, we had the ZEW Economic Sentiment Survey dropping to negative 12.3. This is still within, I would say, pessimism zone, but also a slight improvement from the last reading of negative 14.7. So if it's a 0 or above, we term that as optimistic about the economy. But now if it's negative, we term that as a pessimism. Same thing for the Eurozone. Then at 3:30, this is the most recent news. We saw the CPI coming in from Canada. So the previous reading was an increase of 0.1% in the month of June. Then in the month of July, here we are seeing a 0.6% increase. So this is double the expectation and way higher than the previous reading, meaning that there is a sudden increase in inflation in Canada. So median CPI was the same as expected, 3.7%. Trimmed CPI, 3.6%. Common CPI came in higher than expected. We don't have a report yet on the forex factory, but we are going to dig deeper into the number. So this is the actual report here. So the consumer price index, just want to make sure I'm sharing this, rose 3.3% year over year in July, following a 2.8% increase in June. So this was a big jump from the previous month, meaning that inflation is no longer moving down towards the 2%. It's now moving higher and now at 3.3%. Similar with what we saw in the US, inflation rising to 3.2% from a previous reading of 3.0%. So acceleration in headline consumer inflation was mainly attributable to a base layer effect in gasoline prices, as a large monthly decline in July last year, which was negative 9.2%, is no longer impacting the 12-month movement. So remember, we are comparing what's happening this time versus the same time last year. So now that we are in August, so we are comparing with August last year. So the report that came out in August. So this is no longer influencing the overall year. So as a result of this, we saw a big spike in inflation. So if you exclude gasoline, the CPI was up 4.1%, edging up from 4.0% in June, which still means that other items in the CPI calculation were also moving higher compared to the previous month. So inflation was up 4.1%. So electricity prices rose significantly in Alberta, increasing by 127.8% in July on a year-over-year basis, excluding energy. The CPI decelerated 4.2% after 4.4% increase in June. So as you can see, electricity has been a big contributor to inflation. And now we are seeing inflation moving higher in Canada. So the overall number that you should have in your mind is 3.3%. And in comparison for the US is 3.2%. So the mortgage interest cost index was up 30.6%, posted another record year-over-year gain, and remained the largest contributor to headline inflation. So housing is still a big factor. We saw it happening in the UK and the US, and now we are seeing it in Canada, where housing prices continue rising higher as interest rates continue rising. So there's a shortage of housing across board, that is in the UK, US, as well as in Canada now. And this shortage of housing, especially with high interest rates, is leading to higher demand, a limited supply, which basically pushes the prices higher. So in this case, the prices for housing are up 30.6%, and this is contributing to the high inflation in Canada. So the all items, excluding mortgage interest cost index, rose 2.4% in July. So if you still remove mortgage interest cost, then we are seeing 2.4%, which is kind of consistent with what the Bank of Canada is looking to achieve. But then the big surprise 0.6% gain in July is still something to be concerned about. So the fact that we are seeing inflation on the rise in Canada basically increases pressure on the Bank of Canada to continue tightening policy, or basically to go for another interest rate hike in order to control inflation back towards the 2% target. So now the goalpost is a little bit further because we are looking at 3.3%, and we need to get this back to 2%. So there's still 1.3% that needs to be addressed. So as a result of this, there's increased speculation that the Bank of Canada will go for another rate hike. And as a result of that, you can see the price action that we are seeing here in the USD CAD currency pair. So the price action, this is on a 15-minute chart, is where the market was moving towards a resistance area. The resistance area is the previous high. And then immediately after the announcement of the news, there was a big jump downwards indicating that the Canadian dollar is strengthening against the US dollar. And now we have what looks like a double top formation. So I expect to see the Canadian dollar continuing to strengthen against the US dollar as investors continue betting that the Bank of Canada will go for another rate hike, while the US may hold interest rates steady. So in this case, potentially a continuation downwards towards an area around 1.33831. So as for gold, we are seeing the strong reversal here. So gold was seriously oversold. So after the first break towards the lower side and an immediate rejection of lower prices, now we are on the verge of a breakout towards the upper side. And of course, the short-term target remains 1910. But I think this area here might also be very significant. So it was the high yesterday. And of course, it was the low here some time back. So there is a good chance we could be seeing gold going for the 1914 price level, especially if it breaks this particular trend line and continues moving higher. So this might be a nice target. And of course, if there's a strong momentum, then we could go all the way to the top of this particular pattern, somewhere around this area here. And this is around 1930. So this is where the pattern started at around 1929, sorry. So we could be seeing gold going for 1914, and if it breaks, then closing all the way up to 1930. So the current previous 1 hour candlestick is a very strong rejection, indicating that now buyers have entered, and there's a good chance we'll be seeing some further upside happening here. So might be interesting to trade this in the New York session. So if you have any questions, feel free to type those questions in the comment section, and I'll be responding to those questions right away. So I'm seeing some comments here. Hello, Malombe. Inaanza sangapi? This was from Emmanuel. Yes, I know I was late for about a minute, but apologies. Philip, Lemuel, I can see Charles and Rich, Edwin Otori, Vinny and Regan watching from Uganda. Thank you guys. Thank you, the Uganda team, for joining the session. I always appreciate you. Hello, Christine and Rom is. I don't know if that's how you pronounce that. So this one is watching from Kahawa and Dani. Hope you've had a good trading day. So let's get on to the other data point. So we have seen the CPI from Canada. Let's look at the US. So retail sales was a big surprise. So core retail sales were up 1%. This is a staggering number from the previous reading, which was 0.2%. We were expecting this to double to 0.4, but it jumped all the way up to 1.0%. So this means that there is a lot more Americans who are buying a lot of products from the retail stores. And this basically tells you the entire story that the US consumer is currently very strong and it's not going to be stopped by higher interest rates. So retail sales overall are up 0.7% compared to a previous reading of 0.2 and an expectation of 0.4, still telling you the same story that the US consumer is currently very strong and is continuing to buy even more products. So import prices were contracting, or basically they had entered disinflation, but now we were expecting them to rise by 0.2%, but instead they rose by 0.4%. So even though imported prices or imported goods prices are rising at 0.4%, Americans are continuing to buy even more products. So this was an indicator basically showing that the US economy is currently very resilient. Remember, we also be looking at Home Depot earnings. I don't know if they are out yet. We can always check this. Home Depot. They were supposed to come out at the market open. So my internet is slightly slow. I don't know why. So second quarter, 2024, 2023. This is what we are seeing. Reported earnings, 3.82, slightly beating the expectation of $3.8 per share. So it was an earnings beat, and at the same time, they announced a 15 billion share repurchase authorization. So whenever a company announces share buyback program, it tends to be quite positive. So if you look at HD stock, you notice how it opened. So after the open, it has not opened yet. It's opening at 4:30. So it's down slightly, 0.68%. But hopefully, after seeing very strong earnings, we'll be seeing the company make some good volatility for the day. So with the US consumer being reasonably strong, then there's a good chance that we will be seeing the Fed go for another interest rate hike because this tends to be inflationary. So if consumers are just buying more and more products like they did immediately they came from COVID, what we saw is product prices continue to move higher. And as a result of that, we saw inflation rising quite scaringly. So now we are seeing inflation is coming back and consumers are very strong. They are buying more and more products. And this is quite worrying for the Fed. So the Fed might consider going for another rate hike. So according to the CME Fed Funds Futures, they are pricing in a potential possibility of 11.5% that the Fed will hike interest rates on the next meeting in September, and 88.5% that the Fed may not hike interest rates on the next meeting. So as a result of these, you can see the mixed reactions in the markets. Sorry, I couldn't share that. So this is the 88.5% that they will hold interest rates level, 11.5% that they will continue hiking interest rates. This is Home Depot earnings. They basically announced that they are going for a $15 billion share repurchase authorization program, basically buying more stock off the open market, which tends to be bullish. And of course, this is the Home Depot prices, and the opening price is expected to be slightly lower at 0.68%, which is about 327.72 pre-market. However, after the announcement of better than expected earnings, then there's a good chance we'll be seeing some further upside. So still on the data here, so we have seen there's also the Empire State Manufacturing Index, which came in at negative 19.0 compared to an improvement of 1.10. So numbers in the manufacturing index that are below zero are pessimistic, while numbers that are positive or above zero are optimistic. So in this case, we are seeing the level of pessimism increasing in New York. And this is as a result of slowing down manufacturing activity. And this is quite worrying. So the manufacturing sector in the US could also be entering into a recession, similar with what we saw in the Eurozone, especially in Germany. And this is quite worrying, especially for investors. And this may explain why we are seeing equity indices on a slowdown. So for the last 2 weeks, we saw the two top equity indices are basically selling off. So the US Tech 100 for the last 2 weeks has been selling, and this week started strongly, but now since yesterday, you can see the big sell-off happening in the early morning trading, and now it's attempting to make a recovery. Same case for the Dow Jones. So we saw it dropping in the morning, and now it's seemingly finding some level of support and perhaps reversing at this point. So overall, we know that this is a sideways momentum. It's a market that is basically trading in a range. So it's not going up or down, it's just moving sideways. But then the swings, the extreme prices seem to be nice entry points. So whenever markets gets to this zone, you might consider going for a buy. And if it gets to this other side, you might consider going for a short selling position. So SP 500 made a big sell-off early in the morning. And now after the news, you can see it's attempting to make a recovery after seeing the strong US retail consumer. However, for the dollar index, you can see attempted to go up, but then we had a big sell-off in the following couple of minutes. And in the 1 hour chart, this is what we had. A market that attempted to go up, failed, and now is moving back downwards. So for currencies, it's the same stuff happening here. So big sell-off and then continuation in the opposite direction. And I expect that these trends will hold and continue moving in that direction. So after failing to go back downwards, the Euro USD is expected to continue moving higher as projected early in the morning. But then for USD JPY, now I think we have the pullback that we were expecting. So for instance, if the 15 minutes candlestick crosses looking like this, then it might be the entry we were looking for a pullback to continue trading higher. So USD CAD, as I've already mentioned here, we are targeting 1.33831. Gold would be moving higher. And of course, AUD USD, but now it's still within. We had a slight break happening in the last couple of hours, but now after the news, we are seeing the UK oil bouncing on quite strongly. So from the 15 minutes chart, this is how it looks like. So we had a nice trend line extending all the way from this area here. Market gets to this area here, finds a very strong support, and now seems to be changing direction. So with this kind of price action, we could be seeing oil rebounding from that area and getting back into the channel. So all you have to do is to be patient, observe the price action, and if there's an opportunity to go long here, then you can target even higher prices, assuming that the channel continues holding towards the upper side. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session. I'm seeing questions on US 30 and the NASDAQ. I think I already covered that. Retail sales, an effect on the USD. Retail sales I've already mentioned. A very strong consumer will lead to the Fed going for another rate hike. However, for equity indices, if consumers are buying out of stuff, then they'll be buying out of stuff from the companies trading in the stock market, and these companies will make even more sales. So the retail sales data is quite positive for equities, but for the dollar, I don't think there's that effect because there is a basket of other factors to consider on whether the Fed will go for a rate hike or not. So same analysis I've done for Brent oil tends to be similar with the US oil. Yes, as I mentioned, yes, there's a cocktail of data that we are looking to interpret this news. So from now, it seems like it's edged on one side, on this side where the Fed may actually go for holding interest rates level at the current area. But more and more data coming in is supporting a rate hike. So while the investors may not have reacted to this data as expected, the expectation was a big spike in US dollar index higher, but now we are seeing the opposite reaction. It means that there's other factors that are basically contributing to the potential that the Fed may actually consider holding rates level. So an example is the Empire State Manufacturing Index. which came in extremely low, showing that the US economy is slowing down. So there could have been that cancelling effect between retail sales and manufacturing in New York. So that's it for the day. Thank you very much, guys, and hope to see you on the next one. So remember, tomorrow we'll be dropping a new episode of the Bullish Banter podcast. So if you're wondering what's happening in Niger, what's happening in China, what's happening in the US bond markets, real estate equity, we have already covered that. It's available on the podcast. It will be airing tomorrow. And of course, at 11 a.m., we'll be having market snapshot episode presented by Norbert Kiza, and hopefully everyone will get to benefit from this.